Euro dollar. So the euro continues to chop around, and there's no clear directional insight here at the moment. At this point, we're going to need to see a break back above that high from May at 14.67, or a break below 110.87, that low that we saw going back to the 3rd of September, for clear directional insight. Given the broader medium-term downtrend, the market is favored to break to the downside with a push or a drop back down to next key support below 110.87, which comes in at 108.09. Ultimately, only a close above 14.67 would put the pressure back on the top side. Sterling dollar. So cable continues to drive higher following this impressive recovery out from recent lows, though the market is expected to find some good resistance into the 154 to 155 area with a lower top sought out ahead of a bearish resumption. At this point, only a break back above 156.59, that high going back to the 18th of September, would compromise the bearish outlook. Eventually, a break is seen back below recent support or support going back to May at 50.90, below which exposes psychological barriers at 150 further down. Dollar yen. So not much going on with dollar yen as the pair continues to consolidate and show a contraction in volatility, warning of a pending breakout. At this point, given the breakdown that we saw in August, a lower top is sought out at 121.74 ahead of the next major downside extension below that extreme August low at 116.12. Only back above 121.74 would compromise this outlook. Euro Swiss. So following some impressive gains over the past few months, the market has deferred to some consolidation, but the recovery outlook is still very much intact, with a break higher above the recent highs at 110.15 favored towards the next objective at 112 further up. At this point, only back below 107.14 would compromise the recovery outlook for Euro Swiss. Aussie dollar. So Aussie has made an impressive recovery run over the past several sessions, with the market now trading up to some critical resistance in the form of the 72.80 area. This level is important because it could potentially represent a double bottom neckline off of that low that we saw going back, that recent multi-year low just over 69. If the double bottom is confirmed, it would expose a move all the way up to the 76 area further up. However, while the market holds below 72.80 on a daily close basis, this double bottom is delayed in favor of the potential for another top here, the market to stall out ahead of a bearish resumption back down towards the multi-year lows. So for now, 72.80 will be the key level to watch on Friday to see if the market can close above or below. A close above would then expose more critical resistance at 74.40 further up. Dollar CAD. So dollar CAD continues its impressive pullback from those recent 11-year highs at 134.57, with the market now trading back down below 130. But the overall uptrend remains intact, and any setbacks from here should be limited in favor of a higher low and bullish resumption. Only back below 128.60 would really threaten the current recovery outlook or the constructive outlook for dollar CAD. Kiwi dollar. So Kiwi continues with its impressive run, with the market now closing in on key resistance at 67.40. But while the market holds below 67.40 on a close basis, the downtrend is favored with a resumption of decline seen back towards the recent multi-year low at 61.30. At this point, only a close above 67.40 would give a reason for concern and delay this outlook. SPX 500. So the S&P 500 is back to trading into some key resistance that we saw in September around 2022, where a lower top is favored by this level after the market broke down in August. A close above 2022 would, however, compromise this outlook and suggest that the market could be poised for additional upside. But again, 2022, that high that we saw going back to the September 17th, is the key level to watch, with only a close above to give reason for concern and delay the newly adopted bearish outlook. Gold. So gold continues with its recovery outlook after the market has recently put in a bottom at 1073, those multi-year lows seen back in July, and a higher low is now sought out in the 1100 area to be confirmed on a break back above 1170, which will expose 1233 further up. At this point, only a close back below 1100 would give reason for concern and delay the recovery outlook for the gold market.